Ladies and gentlemen, let's move straight into our very first panel discussion on fintech for an inclusive and sustainable ASEAN. We have our fantastic panel of experts from Vietnam, Cambodia, Singapore, Indonesia, and Thailand. And our session today begins with a keynote address by His Excellency Mr. Nguyen, the Deputy Governor of the State Bank of Vietnam, followed by a discussion. And for all of our guests who are with us, let's remind you all about the chat box function. That is where all the questions and comments will go to our panelists in a short while. So for now, we're going to hand over to our moderator, Mr. Jonathan Wong. And Jonathan Wong is the Chief of Technology and Innovation at UNESCO, who will be leading us through our next session. Mr. Wong was previously the inaugural Head of Innovation at the UK's Department for International Development. He has extensive experience in social innovation and entrepreneurship, innovative financing, impact investing, and technology. He's also served on APEC's e-commerce business council, the UN's Capital Development Fund Board for ASEAN, and is a World Economic Forum Schwab Fellow. Mr. Wong, great to have you with us. I'm going to hand over to you.
Thank you very much for that very kind introduction, Jenny. Excellencies, distinguished participants, ladies and gentlemen, it's really my honor to moderate this session on fintech for an inclusive and sustainable ASEAN. And many thanks to the organizers for one, inviting me to moderate, and two, for highlighting this very important topic. Let me start very briefly by giving some context and to reinforce some of the points that the honorable speakers have just made. I think the pandemic, as we know, has really changed the way we live, work, and indeed a defining feature of the pandemic has been the accelerated digital transformation that has permeated every aspect of our lives, the way we work, the way we do business. And in terms of business, it's fair to say that companies that have had access to the digital world, e-commerce, digital finance in particular, fared much better than those that haven't. And just to give a bit more context, of course, I work for the UN, and I of course have to mention the Sustainable Development Goals. And it's worth mentioning that at the moment, before the pandemic, we were actually off track as a region to meet the SDGs. And because of the pandemic, we are even further off track. And this is where financial and digital inclusion will play a really prominent role, as they figure across 8 of the 17 SDGs and will be critical for the region to build back better from the pandemic and indeed meet the ambitions of the SDGs. And it is in this context today that we are joined by leaders from the fintech space who will share with us their thoughts on how fintech can help Southeast Asia and ASEAN to build back better with inclusivity, sustainability, and resilience. But as Jenny mentioned, before we move to our panel discussion, it is really my honor to invite His Excellency Mr. Nguyen Kim An, Deputy Governor of the State Bank of Vietnam, to give a keynote address. Your Excellency, over to you. The floor is yours. Thank you.
Technologies and Chair of the ASEAN Business and Investment Summit 2021. Mr. Mubashir H. Koba, Managing Director and CEO, Bank of Islam, Brunei Darussalam. Ladies and gentlemen, on behalf of the Management Board of the State Bank of Vietnam, I would like to express my sincere thanks to the ASEAN Business Advisory Council for inviting the SBV to attend and deliver a keynote at ASEAN Business Investment Roundtable 2021 on Fintech and Financial Literacy today. This is an honor as well as an opportunity for the SBV to participate in discussions and listen to sharing and recommendations of experts, managers, and prestigious scholars on Fintech and Financial Literacy for the inclusive and sustainable development of the region. These are the key to support the strategic thrust of the ASEAN 2021, namely recovery, digitalization, and sustainability. Ladies and gentlemen, COVID-19 pandemic has made great impact on all aspects of socio-economic life around the world, as well as in Southeast Asia over the past 2 years, putting pressure on the global economy. This is not only a threat to humans' health and welfare, but also a disruption of the world economy. Currently, most governments in the region have been forced to apply social distancing measures, limit social contact, even lockdown to control the outbreak and spread of the virus. The restriction of contact and travel due to the COVID-19 pandemic has significantly restricted trading activities, social contact, and transaction. In the context of the pandemic and due to the impact of these restrictive measures, staff from banks have to work remotely for long periods of time. At the same time, as the bank branches restrict direct contact, existing potential customers can only access, transact, and use banking services via digital channels through devices such as computers or mobile phones. In this situation, banks have quickly seized their opportunities to accelerate digitalization process, products, and services, relying more on digital technologies and data analysis for sustainable and continuous operation, providing fast, instant, safe, and secure services, meeting the sudden increase in demand of customers through digital channels. It can be seen that in the pandemic has boosted technological innovation, creativity, as well as accelerated the application of financial and digital technologies to enhance financial access and resilience to risks. Meanwhile, digital transformation and financial technology application play an important role in the economic recovery process after the pandemic. In the long term, fintech would help people and businesses to maintain and increase their accessibility to financial services even during lockdown, support businesses to reopen in the new normal. The trend of non-cash payments will continue to grow stronger due to a change in the part of consumer habits and behavior, as well as the development of innovative fintech to make payment convenient, promote the purchase and sales of goods and services, reduce transaction costs. Besides, fintech solutions on credit contribute to shortening the time for funding approval and injecting capital into the economy. Hence, fintech holds great potential in solving the challenges and obstacles caused by the pandemic. It's also an opportunity for traditional financial institutions in ASEAN to speed up their digitalization, significantly shortening the roadmap to digitalize banking activities. Indeed, fintech has promoted banks' digital transformation. The process of digital transformation in the banking sector was accelerated before the pandemic. However, the pandemic outbreak has fastened this process to ensure the operation of banks and meet customer requirements. In addition, the restriction of contact and travel has contributed to promoting the development of fintech in the payment field, encouraging the use of non-cash and contactless payment methods to reduce the spread of disease. Ladies and gentlemen, the strategic priorities of ASEAN 2021 is recovery, digitalization, and sustainability. However, the COVID-19 pandemic has caused significantly negative impacts on the implementation of the 2030 Agenda for Sustainable Development, as this is threatened to public health. National priorities and support for international development might shift to immediate humanitarian concerns. Not only supporting the economic recovery process, as mentioned above, fintech also plays an essential role in sustainable economic recovery and development. Fintech will open up new opportunities for economies around the world in general and ASEAN economy in particular, both for economic development and environmental protection by promoting green growth. Fintech can assist organizations and individuals to make the best decisions about environmental, social, and governance or ESG investment by providing quality data and tools as committed in the ASEAN Business and Investment Summit. Vietnam is making efforts to become a destination for regional and global business investors and will continue to cooperate with ASEAN member states and ASEAN's partner countries to provide practical support programs for businesses in the region, especially in the fields of digital transformation, ESG, technology, and future employment in the region, as well as sustainable and inclusive development. In order to promote the role of the central banks in combating climate change, I believe that central banks need to coordinate with other regulatory agencies in the monetary and financial sector and related industries to develop solutions on concentrating resources to grant credit to projects with economical and efficient energy usage, develop clean and renewable energy, apply environmentally friendly technologies and equipment, and at the same time control the granting of credit to industries and fields with negative impacts on the environment, continue to improve the policies on ESG factors, based on international standards and conventions, and developed a mechanism to supervise and inspect the implementation of the environmental social management system. Ladies and gentlemen, fintech plays an important role in promoting financial inclusion too, through improving access to financial services to the unbanked people or those facing difficulty in accessing traditional financial and banking services. Fintech companies can serve as the extension arms of banks to reach financial consumers by expanding the transaction network, simplifying the use of financial services, providing more suitable services to satisfy various types of customers based on the analysis of user information through technology solutions. In Vietnam, for example, after the introduction of policies on accounting opening or electronic Know Your Customers or eKYC, statistics show that 14 banks provide eKYC-based payment account opening services to individual customers with more than 618,000 active accounts from end of March to the end of June 2021 only. This is an impressive number in the current context of the complicated COVID-19. Recognizing the importance of fintech and digital economy, Vietnam's National Financial Inclusion Strategy to 2025 with a vision to 2030 has identified one of its objectives being to promote the digital technology application, enhance innovation in the design and distribution of financial products and services which are simplified, convenient, easy to use, cost-saving, and suitable for needs and affordability of people and businesses, especially SMEs and people who live in rural, remote, and low-income areas. In the near future, hope that we could well control the pandemic and recover the economy thanks to the collaborative efforts to control the pandemic in many countries along with the development of COVID-19 vaccines. In order to take advantages of these opportunities as well as overcome challenges and risks in the process of applying Industry 4.0 and fintech, countries should prioritize transformation towards Industry 4.0 in line with their economic development level and consider Industry 4.0 as the main driving force in policy action and technology development. With regards to financial inclusion promotion, the governments can take various measures including, first, continue to improve the legal framework to create favorable environment for the application of digital financial services, development of distribution channels, digital banking products and services on mobile devices, as well as solutions to ensure information security and safety, thereby improving access to financial services, increasing conveniences and customer satisfaction. Second, continue to improve financial information technology and telecommunication infrastructure, especially in rural, remote, and isolated areas, in order to improve the coverage of financial products and services, as well as increase financial aspects for access for people and businesses, especially low-income and disadvantaged people. Third, promoting solutions to protect financial consumers in the digital era. Accordingly, it is necessary to develop a legal framework to protect financial consumers effectively, which is in line with the digital environment, at the same time promoting communication and education of people in accessing and using digital financial services, as well as improving personal financial management skills. Fourth, strengthening the inspection and supervision of safety operation of the supply organizations, with a special attention to non-banking financial institutions and payment intermediary service providers. This is to timely detect and prevent risks and build customer confidence when using digital financial products and services. In Vietnam, fintech has experienced rapid development in recent years, especially since the outbreak of the COVID-19 pandemic, thereby significantly contributing to increasing financial access for people and solving the difficulties and challenges caused by the COVID-19 pandemic. I'd like to brief you some achievements of fintech activities in Vietnam in the past times. First, in Vietnam, payment intermediary service providers, which are considered as fintech in a payment area, have shown an active role in social distancing period. Their activities help to create favorable conditions so that people and businesses can make electronic payments transactions quickly, smoothly, safely, securely, and reduce the risks of COVID-19 transmission through the services such as e-commerce, food delivery, transport, booking, top-up, utility bills payment, QR code payment, etc. Payment transactions via internet and mobile channels in Vietnam have experienced high growth during the social distancing period due to the pandemic. In the first 6 months of 2021, the volume and value of transactions via internet channels increased by 62.5% year-on-year and 32.03% year-on-year respectively. Transactions via mobile phone channel increased by 82.71% year-on-year in volume and about 115% year-on-year value transaction via QR code channel. Secondly, digital transformation activities have been actively implemented by credit institutions in Vietnam with remarkable results, when up to 95% of them have been developing and implementing digital transformation strategies. Most banks have applied technical solutions and new technologies in their operation and service provision, of which 9 out of 19 operations have been completely digitized by some banks, such as savings, term deposits, payment account opening, and using bank cards, e-wallet, money transfer, etc. Many banks have also applied AI, ML, and big data technologies to evaluate and classify customers and make disbursement decisions, etc., in order to simplify procedures and shorten disbursement and loan provision time. It can be said that Fintech has been showing its potential and role in helping financial institutions accelerate digital transformation, especially in the past 2 years under the impact of the COVID-19 pandemic. Fintech makes an important contribution to recovery and development of the economy in the wake of the COVID-19 pandemic. Moreover, thanks to Fintech, the process of post-pandemic economic recovery could be quick and effective and may arise new trends in the economic structure. Above are some of my sharing on the role of Fintech in sustainable and inclusive development in the ASEAN region and some experiences of Vietnam. Thank you for your attention, and I wish the Roundtable a great success.
Thank you very much, Your Excellency, for perfectly setting the scene for the session we will have just now. So thank you very much, Your Excellency, again for joining us and for those insightful remarks. We will now move on to our panel discussion, where leaders in the fintech field will share their work and perspectives on how fintech can support an inclusive and sustainable ASEAN. Before we get started, let me firstly introduce the panel. Firstly, we have Her Excellency Dr. Sri Chia, Assistant Governor and Director General of the Central Bank, National Bank of Cambodia. Thank you for joining us here today. We have Mr. Sopnendu Mohanty, Chief FinTech Officer, Monetary Authority of Singapore. We have Mr. Adrian Gunadi, Founder and CEO of Investtree and ASEAN BAC member for Indonesia. And last but not least, we have Mr. Kelvin Tan, Global Lead Nexus at the Standard Chartered Bank. Again, before we get started, a reminder to the audience, I see many of you have done so already, to post any questions you have in the chat, as this panel discussion will be followed by a Q&A. So without further ado, let's get started and really open with a question, a very broad question to the panel around, indeed, how fintech can support an inclusive and sustainable ASEAN. And let me first turn to Your Excellency, Dr. Chia, for your perspectives on that very broad question. My apologies, but over to you first. Thank you.
Well, thank you, Jonathan, and thank you for having me. On your question, just repeat your question. So how can fintech promote financial literacy or financial inclusion? Yes,
that's fine. Yeah.
Financial literacy.
The financial, I suppose, hand in hand. Maybe.
Well, there is a survey that has been done by the World Bank, the Global FinTech Survey, and the question were asked to different countries in the world, and I just happened to consolidate the statistic from the ASEAN country. Unfortunately, the latest survey that was done was in 2017, but I think it's still relevant. So the question asked was, what are the reasons for people not having a saving account in a financial institution? 70% of the reply of this the survey in ASEAN responded because they don't have money, which is quite interesting. And then the second main reason was followed by that's about close to 40%, they say, because they don't need financial services. And then the third and the fourth, which is quite close together, is the lack of documentation and too far away. And I think even though fintech can't solve, with the first reason, which is don't have enough money, but I think for the third and the fourth reason, which is lack of documentation and too far away, this is where I think fintech can come in and bring financial services closer to home. And that has been done through the mobile phone applications where you can transact 24/7 from the comfort of your home without traveling. And if you think about how it can also empower women, it helps women to be home and take care of whatever business that she has without having to be physically traveling the road and take the risk to a financial institution branch and do her transaction. So that's in a way help with it. In terms of the lack of documentation, I think it can also help with the amount of data that has been collected through digitization, and again that can also help with opening an account. If I can't come up with an ID, would something else help in identifying me? I don't think there is any real example where this is applied, but I think that anything is possible. Would a photo of myself, a selfie of myself, if I identify my location, and if it's proven that on Google I mostly stay at that very same location, overnight, would that be enough to identify me as a person? And this has go a long way for migrant worker, illegal migrant worker. How can we empower them to have access to financial services and remit money home? And it's not going to solve the fact that they are illegal, but it can help them to properly remit money home and not remain in the illegal space forever.
Thank you so much, Your Excellency. Yeah, and particularly on emphasising that point on engaging formal, indeed, women who are often left behind during these kind of various technological revolutions that we have. But I'll maybe come back to some of those points later on, because I saw your CNN interview, which you articulated these points again very well. Let me now turn to Sonendu for some perspectives on fintech, particularly around kind of the opportunities for inclusion and sustainability in ASEAN. Over to you.
Hi, good morning. It's a rainy day from Singapore, and I hope wherever you are, it is quiet and it is bright and sunny. Well, that's quite a broad question in terms of the impact of fintech and inclusion. I think the previous speakers have gone in length in expressing that in terms of the impact and the numbers and the ASEAN growth. But let me, for the audience here, narrow down to a particular ASEAN situation when it comes to fintech and inclusion. And I like to break those three terms under three buckets. There's a distribution opportunity, there's an instrumentation opportunity, and there's a manufacturing opportunity. Largely, the ASEAN story and also the global story has been a distribution story. How to make fintechs, financial services accessible to people, how to make payments easier to process, how to make the QR code common for everybody to transact. We have recently heard Cambodia linked to Malaysia, how to make the process of accessing the payment services easier. To me, these are largely distribution challenges addressed by fintech, and it's actually had a huge impact because distribution challenges were primarily excluding people when it comes to financial services. And a lot of technology has gone, a lot of apps have been developed, a lot of money has been invested in companies who are solving this problem. And I would say on a scale of 10, the ASEAN is doing 8 to 9. when it comes to solving the distribution challenge in fintechs. And they have done inclusion, impact, and other things. But there are a lot of work to be done on the other two, on the instrumentation. And let me explain this. When I say instrumentation, it's not like you go and sell the same deposit and same checking account and the same mutual fund to the people. I think instrumentation means how do we, now we have solved the distribution problem. We have a wider segment of people who can be part of the financial services. Their needs are quite unique, as their income segment that is quite different. We need to design instrument very different kind of product for them. How to design a pension plan for a very poor, for an unstructured labor force. How to design micro insurance for small risk coverage for poorest of the poor. And you need to create those instruments. And that is those instruments today largely doesn't exist in ASEAN market and in many parts of the world. And that's the piece which fintechs have to step in. And that's not the easy money for them. Fintechs have largely made a lot of money by indulging in the distribution problem, credit to them. But this is a difficult problem, the instrumentation problem. So somebody has to solve it. This is where the incumbent, the bank, the regulators, the policymakers, the market infrastructure all have to come together, including fintech, to design new product for this expanded financial sector. And the third part is manufacturing problem. Okay, we can design a smart insurance product or a smart pension product. Who's going to manufacture? Which asset management company is going to put the money behind and support this risk coverage? So you've got to start building the manufacturing capability for designing this new product. So when it comes to manufacturing and distribution of financial product for the expanded included financial sector, I think we have a long way to go. Fintechs who are tackling this subject, we call it B2B fintech, have a long sales cycle, they're a long time to deal with. And we see a lot of fintechs, especially the matured one, may not be glamorous enough to be visible in the public space, are working in this space. So that's my pitch when it comes to the ASEAN state of situation when it comes to fintech. And let me wrap this by saying that underlying this three way of doing things, there's a need for public digital infrastructure. And when I say public digital infrastructure, it means four things. First, let's take the ASEAN context. Every country must have a trusted digital identity, a digital ID. Every country must have a trusted corporate digital identity. You cannot be saying that you are a digital economy when you don't have a trusted ID of your in the digital space. That doesn't work. It is highly ineffective. You cannot design product if you are not digitally identified in a trusted way on the network. Second, we must have a method or a process or a governance structure to exchange data. We have seen what is happening in China. We have seen what's happening in the ASEAN market. In many countries, people are worried about data abuse and how to ensure that we build trusted data exchange so that we can move data, the digital data in a trusted way. Third, which I think a lot of progress has been made, is on the payment side. How do you move money efficiently? And let me be very particularly brutal here. We have been largely congratulatory to ourselves when it comes to connecting payment system. But let me give you a brutal fact of life. Despite all this improvement, the cost of moving money from A to B across the border is still $15 to $10 per $100. That is brutal. That is unacceptable. We got to fix it. And I'll take an example. When Singapore and Thailand connected their domestic payment network, that same $15 cost per $100 transfer went down to $3, a $10 benefit to the poor people who receive money. And that's the heavy lifting we must do, connect our banking domestic payment system to improve the real cost of transfer. With due credit and due recognition being given, we are solving the front-end problem in QR payments and other things. And the fourth piece is what I call is consent. We must give the power of consent to individuals and corporates when it comes to exchanging data. The third party cannot have access to data purely writing a very complicated 3 and C. The power of consent should be with the citizens, and we must have a system where we can consent our data to third party. This four foundational infrastructure will solve the three challenges I articulated. To me, that's the current state of ASEAN fintech.
Great. Thank you very much, Somnendu, for that. And again, we're doing well, but we're not there yet. I think is the message I get from that. And thank you for very much articulating those those challenges so succinctly, and indeed the solutions as well. Let me now turn to Adrian for some perspectives on that very broad question. So over to you, Adrian.
Thank you. Good morning, ladies and gentlemen. I think it's a bit different story for Indonesia. Fintech has tremendously grown in Indonesia over the past 5 to 6 years. I think this stems from the fact that Indonesia, before Fintech was around, we had a huge issue with regards to financial inclusion, financial access. In terms of savings account, it was less than about 30%, the savings account penetration. In terms of the credit gap to SMEs, it was around 100 billion as recorded by the World Bank. And so when we see the rise in technology, the growth of technology, particularly fintech over the past 5 to 6 years, I think this became one of the key agenda that was supported by the regulator, in this case OJK and also Bank Indonesia, but also the incumbents actually embraced on how we can build further collaboration with fintech. And so this is a journey that we have been on over the past 5 to 6 years in developing the industry. Predominantly, I think for Indonesia, there are two main streams of the fintech industry that has grown. One is on the payment side, and the second is on the lending side, of which I actually am also chairman of the Indonesian Fintech Lending Association, of which we have 122 fintech lending platforms that are registered and licensed with the OJK. And we obviously see how this access to finance for small businesses has accelerated because of the previous credit gap that I mentioned. There are several sub-segments within the Indonesian fintech lending space. One is focusing on the consumer side. A recent product that has grown very rapidly is the Buy Now, Pay Later, which connects with e-commerce platforms. On the micro side, obviously we see a lot of rural developments in terms of digital finance to the rural areas. And what's unique, many fintech players are actually working together, collaborating with agri-tech. We see a strong collaboration in the micro segment between the agri-tech and the fintech lending players, of which that gives more access to data, more access to information, which is very relevant. And the third segment that we see is in the small, medium, and business space. Strong collaboration between the B2B e-commerce, the e-procurement, because we see that more and more SMEs are going online. And I think this is very relevant to what we are facing right now in terms of the pandemic, how the pandemic has actually accelerated SMEs to go online, to sell their products and goods online, to access more digital solutions. And I think this is part of the evolution where fintech is playing a critical role in providing this access to finance, specifically to the underserved in Indonesia. The next point that I wanted to highlight is actually something that we also see in the recent development, that the fintech are actually now also developing or adding new products and services beyond the traditional lending. I think Supnendu also mentioned about catering solutions, and I think what's unique is some of the fintech players are actually developing business solutions jointly with partners for SMEs. For example, cloud accounting services, digital invoicing, and so combining or adding or new solutions on top of the traditional lending piece that they've been developing. So we look at it as a more embedded finance story evolving in Indonesia because of this cross collaboration with ecosystem. So fintech on its own, it's now being embedded into other unique digital ecosystems, as I mentioned, like the e-commerce, agri-tech, logistic tech. And so this is how we believe that going forward, there will be a stronger collaboration amongst verticals. But also what's unique is a strong collaboration between banks and fintech in Indonesia. Given the fact that there is also a requirement for banks to have at least 30% of their portfolio in productive space, for example. And so this collaboration between banks and fintechs enables banks to acquire the SMEs at a much lower or cost-efficient manner. It enables the ability to underwrite credit that was not possible previously, because obviously the scoring engine that the fintechs would use is using alternative data source from the e-commerce behavior data of the SMEs, inventory data. So I believe this is a very unique angle on how fintech and collaboration with other ecosystems has enabled us to continue to the gap, the financing gap, and drive more inclusion. And in 2020, the total fintech lending industry facilitated almost $5 billion of loans to small, medium enterprises, which is almost a 30% increase compared to 2019. So we see how in the midst of the pandemic, 2020, the industry continues to grow, and more importantly, provides a lifeline to the small, medium enterprises in Indonesia that has been impacted because of the COVID, but also how the industry is now looking at new ways of expanding and developing embedded finance through other digital ecosystems. So probably I'll end there as a showcase of what we have done to further accelerate this inclusion in Indonesia and how technology and fintech is playing a critical role in addressing the underserved or unbanked segment.
Thank you very much, Adrian. And what came out very clearly from the Indonesia experience there was this importance of collaboration, both between kind of tech players and the broader ecosystem and integrating solutions as well. So thank you very much for that. Kelvin, over to you.
Hi, everyone. The problem with going last is because all these very intelligent people have gone first. It's really not much value add I have to this entire conversation.
Right?
So I will say this. I will say that every one of the speakers have brought up all very good points. I love Somnendu's 3 problems and 4 infrastructure solutions framework. And I fully agree, right? So what I will do instead of talking about the fintech ecosystem, which everybody has espoused to death, is really saying this. What we are doing is trying to solve for it. What we are doing here in Nexus is creating an engine, a middleware layer, a capability to entrench ourselves as a banking as a service with multiple ecosystem players and enable access, plus the production mechanisms which Somnendu is hoping for us to, for fintechs to get into more, to provide capabilities for the segment of one in mass market retail lending or retail and MSME capabilities across ASEAN. And absolutely right, Somnendu is completely right in the fact that as we are trying to roll out in multiple countries, we find that the unevenness of the infrastructure requirements makes it difficult, right, for speed of execution and true inclusiveness from a region-wide perspective. So I'll stop there because I think there are far more interesting questions ahead of us than to expound upon the high-level view of fintech in ASEAN.
Great, thank you, Kelvin. And yeah, we have a lot of questions coming in, so let me kind of move straight to that this session of this part of the session. So let me start with this one. Well, what do we have here? So I'm reading off my phone. Bear with me. Policy process and legislation doesn't move at the same speed as fintech adoption and digitalization uptake. And what is an interim platform being considered when regulatory sandbox structure is not the same across jurisdictions? So I think broadly this is a question around around regulation and potentially stifling innovation. But I think with this one, I think maybe I turn to Dr. Chia first, and then sort of Mendu, because I know a lot of the sandbox work in Singapore as well on this question of regulation. So over to you, Your Excellency, first.
That's not an easy question, I think. And it is always the case that the private sector will always move ahead of the regulator, whether it's in fintech or in other financial innovation. In this particular case, what I can share with what we've done in Cambodia is we took this approach of observing what's going on first, learn how it's done, and have a very active dialogue with the private sector, and then try to come up with the regulations that protect the depositors or the users, consumers, and I don't think there is any one-way approach. Maybe Nandu can add more to this. I think for us regulator, it's just trying to be open-minded and see what is happening on the ground and discuss, as I said, try to understand what's going on and work on regulation later. You can't regulate something ahead because you don't know what could be the consequences on this. I remember I can share an example of what we've done with the e-wallet when it first introduced in Cambodia I think it was in 2009. And at that time, I think the one M-Pesa was quite prominently spoken of at that time. And when e-wallet, a company called Ring came to us, I was a bank supervisor, and my reaction was that, well, if you take money from the public, then you are a bank, and therefore I need to regulate you as a bank. And then we had to go all the way to negotiate, well, this is not a deposit, this is just an earmarked deposit. So can we find other way to regulate us rather than put us in the bank basket, which would require a lot of minimum capital requirement, a lot of prudential regulations and compliance, etc. And so what we did was we tried to find a middle ground where we can let this new animal into the industry, but then at the same time observe what was happening. So the first things that we did was to allow it to, of course, go on live, but they had to be attached to a banking institutions because we didn't know what it was at that time. And so we said, well, since we don't know what it was, we want a bank, and at that time it was a big Australian bank. We said, if you can take the risk on their behalf, then we will let them do this business. And we want to make sure that the money in the wallet is fully protected. And we had no regulation. It was a simple sort of agreement between the bank and the regulator at that time. There were no other framework for other players to come in. And so when we observed this one player actively, doing their business and growing, then we start thinking of, what went wrong, what we can do better, and come up with proper regulation. That's the way we did it at that time.
Great, thank you very much, Dr. Chia. So Nendu, I'm sure you have perspectives on this.
If you take the word technology out, I think that question it's quite easy to answer because it starts with policy and regulation, and adoption follows it. But the moment you add technology, this three-word gets completely disrupted. Primarily because technology starts with adoption. That's the very nature of the way a technology-driven ecosystem operates. You start with adoption, and that's the reason why regulation is principle-based, because you have principles been set in the regulation, broadly capturing the particular services, and then there's a regulation which backs it. The challenge comes is most of the regulations falls into some sort of gray area when it comes to instrumentation. When you design a product and then you look for regulation to support that product so that it can be sold. And to answer that question, many regulators have responded by creating sandbox where you go there, you put your product You work with the regulator on a 6 to 1 year period, and you test it against a constrained environment, and then you understand the risk, and that same activity get regulated after the sandbox. So the answer is not easy to execute this particular process, because it needs, while it may not happen the same speed, but the way I see that, you start with the idea, it gets to an adoption state because of technology and new product design. There could be a sandbox activity going in partnership with regulator. Till it attains a systemically important state, it becomes an important topic for regulators to put the policy stance, and hence regulation follows. But the question is not of speed, the question of how you sequence it efficiently so that you don't delay regulation and policy stance on a great idea. Great example is buy now, pay later. You look at every country, it's gone crazy. People are really loving the product because it is easy. People at the point of sales are excited that there's a cash flow solution for them. But regulators are now getting concerned because it has become very systemically important. It may create unintended consequences. But here comes the ability for regulator to respond at a speed, and hence not protect that from getting those issues coming out of this particular new product. But that doesn't mean stop it. You must have a thoughtful regulation responding to that. And that's where comes the activity-based regulation. When you look at a particular activity, look at the risk it poses and proportionately regulate it. Don't put the full force of regulation and kill a good product. So this is how a journey will move on in this space. There's no easy answer. But if I have to call out one thing which we need to upgrade, it's the talent. We got to, because this is engineering, this is technology. You have to upgrade the talent skill set of policymakers, regulators, and the industry to be able to appreciate what it needs to make it work properly in the ecosystem. So talent to me is something, if it addressed rightly, you can solve the other three parts easily.
Great, thank you very much. I just want to dwell on this question a bit more, actually, because of course ASEAN is an intergovernmental body, and we've heard from the public side. But I'd like to hear from the private side as well, actually. So maybe Adrian and Kelvin, you could share some brief perspectives on this regulation challenge as well from your side of things. Maybe Adrian first.
Yeah, let me try to also add in to what we are doing. I think the role of an appointed association that acts, so quote unquote, like a self-regulating organization is also helpful to manage the speed of this innovation. And I think this is what we are doing in Indonesia. So there are an appointed association acting like an SRO, where we have our own market conduct, we set our own code of conduct or ethics policy. We also have data, a centralized data. We're able to actually provide or advise policy also on the practices of some of the fintech lending platforms. So this is how we work together with the regulators to ensure that we are able to uphold the standard practice, clear information to the users, but also uphold consumer protection. Because I think this is also an issue that how do you balance within the growth, but also maintain a high degree of consumer protection. And definitely, I think having an active and a more, I would say, faster implementation in terms of the association level would support what is set in the overall policy of the regulators. Again, we see how the decision or the policies can be a bit behind compared to where the development is. So I think that is the role of members association to drive that and basically have a clear guidance and also framework, and more importantly have a clear code of conduct that can be enforced to the members as well.
Great, thank you very much. Kelvin.
My view is slightly different to the rest of the panel. I think that it may be prudent, obviously, from a regulator's perspective, to try to ensure the efficient approvals and reviews and the right level of scrutiny in terms of anything that comes from a financial innovation standpoint. But the truth of the matter is that there will probably be a mix of approaches, right? As Somnendu nicely pointed out, and as Adrian nicely pointed out, there will be some attempts at self-regulating and ensuring the public. And don't get me wrong, I think the regulator has the mandate, right? Given that they are usually headed by someone who has won the mandate at the election, they have the mandate to ensure the protection of the country, right, of the citizens of the country and the businesses in the country. And therefore, in exercising that mandate, they should be prudent in ensuring that we don't do anything silly. No one does anything silly. And therefore, that's why banks have massive compliance departments to deal with these things. That's it. To try to envision a one-size-fits-all end state process is great, but I don't think it'll ever happen. What will happen is there will be technology companies or fintech companies, or however you want to brand them at base, where they will take the risks necessary with or without regulatory approval if they think the size of the price is big enough and if they think that they've solved for all the things that need to be solved for, right? Buy now, pay later is a very good example of something like that, right? And financial in China was a very good example of something like that. That's it. On the flip side, I think the hubris that comes from a lot of fintech companies who try to say, oh, look, I kind of think this works. I kind of think that we've solved for all the consumer and all business protection requirements. We generally flips back on that at some point in time when the thing becomes big enough and more significant such that the regulator reviews it more stringently. So this constant pull and pull will be the case in the near future, in the foreseeable future. In fact, I would bet in my career lifetime, until if we all strive towards a uniform, efficient way of policing this, you will have one, and there will be some standard and policy for it, but it will not run the way that we all dream it will run. I think that's my view.
Great, thank you so much. We have a lot of questions. This is a very lively audience, so let me try and get through them all. And the next question is, do you foresee that any ASEAN member states would adopt the digital iteration of their currencies like the Bahamian government had done with their sand dollar? I think this is around digital currencies, and I've been asked to ask this question to Dr. Serey. So over to you.
Sorry, could you repeat the question again?
Sure. Do you foresee any ASEAN member state would adopt the digital iteration of their currencies? I think this is a question on digital currencies and central banks and some of the pitfalls or maybe opportunities that may cause. So we welcome your thoughts on that. Another tricky question.
I don't know. I think from a cultural perspective, a lot of the ASEAN countries are very conservative, and I think our elderlies are, they love to hold on to their cash. That's just culturally speaking. In terms of whether it is politically or technically possible, I think it could because if you look at the use case of this digital currency, it would be very helpful for developing country where financial inclusion level or the existing financial infrastructure is not efficient yet. So if you look at ASEAN country, apart from Singapore and to some extent Malaysia and Thailand, the rest of us have a very low level of financial inclusion. Actually, according to the global Findex data, as of 2017, it may be changed afterward, but as of 2017, less than 50% of the populations in the rest of the 7 countries of ASEAN have access to financial services or have a bank account. And so it could possibly justify, the fact for central banks to look into, ways to make access easier. But having said that, I think access is only one issue to be solved in the whole problem, since we're talking about financial literacy. I think we try, a lot of the time, we try to address the supply side of financial inclusion, that is making access easy, cheap, and everything. But we haven't addressed the demand side, which is, the people. And try to see, once they have access to this cheap and easy funding, what are they going to do about it? Do they know how to manage it? And that is another question where I think financial literacy can help. And financial literacy, it's a long effort to build. It can't happen overnight. In Cambodia, we try to embed financial literacy element into the general education program. So children from grade 1 up to 12 will be learning, how to calculate interest rate, how to do annuity and things like this. That is something that I think we should also be addressing. If you look at the micro, I saw some questions on SME. When you look at, how we won, ASEAN, we have this AEC concept, ASEAN Economic Community. And I think the fact that we don't have that financial inclusion at a certain level, it impede a lot of small businesses to access funding. And when our small businesses can't access funding, it risks to be driven away by, businesses from outside. There were, and in 2015, there was a survey done by the Economist Intelligence Unit looking at how ready businesses in ASEAN are in embracing, the ASEAN Economic Community. And at that time, it says somewhere about 60–70% of the businesses were ready to embrace AEC. But the interesting point of it is that the majority of the company survey were multinationals. They were not even ASEAN homegrown companies. And if you were to take ASEAN homegrown company, I don't think they're ready. And I think financial inclusion is probably raised as one of the main challenges for these companies to get enough information. So, there are surveys on, what are the challenges for SME to grow. And they were access to finance, access to information, R&D, and there's one more thing. But I think all of this will come under, access to finance. Do you have money to buy information from the market? Do you have money to go into R&D? And so this is, again, something that we have to really look into, how to help our small and medium businesses access to financial services so that they can grow, so that they can compete, and especially to promote the region as a whole, and not, creating all these easy sort of, trading channel, but in the end, it's multinational companies from elsewhere who come and benefit, and it's not our own, regional homegrown companies. This is not to say that we should have preferential treatment, but I think there's a lot of homework to do in the region as well. That's my take on this financial inclusion and trade in ASEAN.
Thank you very much, Dr. Sere. Let me try and bunch a few questions now. There's a lot of questions around risks and challenges. So there's one around, what's this one? Sorry, bear with me. Although making a technological revolution, some issues and challenges are ahead. And some of the bigger problems around trust, low transparency, security breaches, certain customer habits, how can we overcome this? Another one around risks would be, how do we cope with fraud, privacy, data theft? There's some themes here. And what can ASEAN do or should do to address these issues? If there's another one, fintech is growing, but what is the strategy to eliminate and reduce the risk? So I'm mindful I've just outlined a number of risks that the audience have raised here, but again, maybe I open this up to all of you to share your perspectives on how severe these risks are, and what ASEAN leaders could do about it. So, floor's open.
Maybe let me take a stab at the last question. When we say fintech is growing as fast as scammers, I would say that fintech has expanded the canvas of providing financial services. Hence, the scammers have also expanded the canvas. So it's a relative term, not an absolute growth disproportionate to the expansion we are seeing. It has gone bigger because the canvas is not much more expansive. If you unravel that question, and the second part of the question is, they know everything about us. Well, you can only provide financial services if you know somebody. That's called know your customer. So more you know your customer, better you provide appropriate financial services. So it is not something you can eliminate. It is a necessity to know your customer. And the real question is, how do you protect this data from being abused? How do you protect this privileges being abused? I think that's the reason I want to take the discussion back to, in ASEAN context, the need for foundational digital infrastructure, which in fact Brunei and Cambodia work with Singapore and Ghana and Nigeria and Kenya on a paper called Foundational Digital Initiative. FDI, a paper is out in the public domain. Let me instead of trying to solve the issue at the distribution point, let's solve the issue at the foundational point. Let me re-explain that again. We got to have a trusted digital ID protected by the state, or in some countries that they may debate. It could be a self-sovereign ID. And the data associated ID must be protected. It must have a governance structure where such data being exchanged is well thought through electronically from a consent, governance, and being obligation of third-party access data. So you need that foundational infrastructure, almost like in a physical world, you got to have roads, airports, police system to manage all this thing. In a digital world, we need that foundational infrastructure, which is the data rails, the payment rails, the consent rails. And we cannot get into this romanticism by a lot of fintech saying that, let's give you access to everything. Give me access, I can do magic. No, you cannot do magic. You've got to rely on common rules, and that rule can be only solved by building digital infrastructure. If you don't build that infrastructure, it will be a patchwork at the front. So that will not serve anybody. Fintechs will benefit if we have a public eKYC systems. Fintech in Singapore, Grab, and banks, both are able to access the same eKYC infrastructure. So fintechs will be able to access that infrastructure as a shared utility. So you got to think about common shared utility across ASEAN, connected, and then try to solve this problem rather than doing a patchwork at the front, which will not solve.
Thank you. Anybody else want to come in? I see Calvin.
Yeah, I'll take a quick shot at this. I mean, I absolutely agree with the need for foundational infrastructure. That's going to be a game changer should it ever come to play, as we've already seen in some countries. But more interestingly, I would say, I flip it around. Let's take another perspective on this. 90% or 85% of fraud scams from a consumer and an MSME perspective generally emanates from consumer and business behavior, right? Generally because someone shares their password, says something to someone else, puts their password as 1234, 567. Those are the key reasons as to why that's the case. That being said, and establishing that as a caveat, the truth is there are three ways of addressing the key risk. One is preemptive, one is incident response, and the third one really is educational. And I believe that what it takes when we go into a full-fledged fintech kind of incursion into the markets is you need a robust preemptive cybersecurity capability, which there are not many in the region. At least most large cybersecurity companies with that capability do not sit in ASEAN, and to some extent the businesses are not large enough to justify the kind of preemptive capabilities to be built into a lot of the stacks. That's it. The second bit, which is incident response, is also a cost to the companies who are running this, right? And therefore, we need to have a larger pool in order to be able to justify the first two. And then the third one, as you roll this out, there needs to be a concerted collaboration with the regulator and the government in general to educate the individuals in terms of how they shouldn't behave. I know there are some programs, and I know that there has been attempts, but there will always be the marginalized cases of people using 1, 2, 3, 4, 5, 6, 7 as their passwords, or providing their passwords, or taking a screenshot of their IDs and sending it to their friends, right? So if you have those three pieces in place, generally it will be a continual race against hackers and scammers till the end of time. Is the way I'm thinking about it.
Great. Thank you, Kelvin. Anybody else want to come in on this question, or there's a couple more that we need to address? Anybody else? Okay, let's move on to the next one. How can we ensure that less developed countries can keep up with others in Southeast Asia? And again, the point around the challenge of digital identity was raised again. So I think this is around inclusion, shall we say, between countries rather than within countries. Any thoughts on that from the panel?
Sorry, we didn't get the question again.
The question was, how can we ensure that less developed countries can keep up with others in Southeast Asia? This might be a challenge to digital identity, is the exact question. But I think for me, I think it'd be interesting to get perspectives on kind of, if you like, inclusion between countries rather than within countries as well, and how can we kind of leave no one behind, as many of the speakers previously have mentioned.
I think Sarah is the best example to answer this question. She has done it, dusted it. So let's ask that question to her.
I thought so too.
Always throw the hardest questions to the only lady on the panel.
Volunteered by your kind panelist.
Well, I think starting off with the foundational stack that Subnandu mentioned would be a good beginning for developing country. And I think most of the struggle that we face generally is that we may have a lot of things happening at the same time, and it become very fragmented. So in the case of Cambodia, we have the digital ID that is under one authority. We have the data exchange under different authorities. We have the payment under another authority, the central bank. And then we have so many others that are so fragmented. And so I think to be able to understand, what is needed to build, to bring all these together is very important. And that's why we look at example like in Singapore and other country. So by working on the foundational stack that Subnandu mentions on digital ID, on consent, on interoperability of the payment system and data exchange, in a way sort of help us better understand, where we stand and where we want to go. And just having this clear sort of roadmap is helpful. The second, I would say, on cross-border data and of some of the rules that come out of it. It's when you're in a region, when you exist in a region where everybody else is running, you can't just keep walking. You also need to run. So I think among ASEAN countries, sharing the knowledge, sharing the experiences, sharing the data would be very important to lift everyone up to similar level.
Great, thank you so much. And Dr. Seri, a perfect segue to the other question that was posed, which was around this cross-border element. Would the panelists please share your thoughts on how fintech solutions must or could be interoperable across jurisdictions to achieve the end goal of economic integration and a common market for ASEAN? Does anybody want to come in there?
I think that's a good question. And I would always say interoperability has got two things. Interoperability in moving money and interoperability moving the ownership of a contract. Because that's ultimately the ultimate nirvana of a interoperability, that you can move money in the most seamless way and move product execution in the most seamless way. Now, interoperability relies on technology on few things: standards, gateways, switches, and some regulatory support, so that there is a common recognition of certain standards across certain data elements across the border. So there has to be certain regulation which recognize across ASEAN respective digital IDs. There has to be some regulation in understanding that the way KYC is done, which I think largely solved across different entities. And then there has to be interoperability of the system, so that systems are connected, they can talk to each other. And I'll also argue here, you don't need the same standards and same, if you have switches who can translate for you and move things across. A good example would be things like payment gateways. They're an excellent example where two countries with different standards can switch each other and move money efficiently. You don't have to burn the ocean to build common standard, which sounds good from a bureaucracy perspective, but may not be most efficient. And the last piece on interoperability is to me, and I would say is a whole set of challenges around the endpoint experience. Because for example, I'll take a real example. When Singapore and Thailand connected the payment system, or wanted to connect the payment system, we wanted to ensure that the endpoint experience is identical. Let me explain that a little more. In Singapore, we move money between each other in banking services in 3 clicks, just knowing each other mobile phone number, call pay now. We wanted to have the same experience if somebody sends money to Thailand. I need to know somebody's mobile phone number in Thailand. Can I move money in 3 clicks at the most cost efficient way? In Singapore, it's 0 cost when you move money from A to B. Now to do that, it took us 3 years to connect the system just to execute the exact same user experience. We have to solve for common policies around AML KYC, sanction checkings, standards, common gateway, switching messages. All this hard work goes just to deliver an identical experience in both sides. So to summarize everything, identical experience at both ends, creation of switches, gateways, which can move information in an interoperable way, and some policy coverage support on consumer protection, privacy, and trusted and legal framework to recognize digital data and identity.
Great, thank you so much. I don't know if Adrian or Kelvin want to come in on this question. Adrian, I know you dropped off for connection issues, but the question was around whether fintech solutions must or could be interoperable across jurisdictions, so as to achieve the goal of economic integration in a common market within ASEAN. So maybe Adrian, over to you first, and then Kelvin.
Yeah, let me try to share our experience. In Vestry ourselves, we're operating in 3 countries: Indonesia, Thailand, as well as the Philippines, right? So based on our own experience, it's very challenging to achieve that common interop amongst the countries. I think, as Sopnendu mentioned, there are some regulatory standards in each country. So having an entire same platform, it's going to be a challenge. I think that's where the tech angle is important, to be able to have customization for each country. And I think that is where technology plays a critical role in developing a infrastructure where it is quite easy to connect interoperability, but also it's very modular, I think, and open. I think those are some of the key points, because there will be local regulatory standards. You need to adjust some of the standards of your general product. So for example, we do mostly working capital finance, supply chain financing, invoice financing. In general, it will look the same, but there are some parts, some parameters that we need to adjust based on local country regulation. And that's where you need to have the right tech architecture to enable you to do that. I think that relates also to the issue on talent, having the right talent for you to scale your business, not only domestically, but also globally.
Great, thank you very much. And Kelvin, briefly from you, my okay. So Pendu, I'll give you the final word. Yeah, I'm painfully aware that I'm just on time right now, and I don't want to annoy the organizers. But maybe Kelvin very briefly, then so Pendu, final word to you.
It's okay, so I tend to be very quick on this. So Somnendu has already established the difficulties in doing this, right? What I just want to bring up one level to ask is the political will in ASEAN there to create this capability? If there is, then making it happen is effectively a matter of effort and time. Now the question is whether or not that's something that's high on the agenda of the regions. Perhaps it is, perhaps it isn't. Sorry, Somnendu, back to you.
No. I was saying Adrian brought a very important point. I call it undiscussable, but given he has raised it, I will talk about it. It's about the tech risk management, because a lot of time we don't discuss this. The real issue of interoperability is the ability for regulators to approve a particular tech stack, and the tech architecture and the tech risk, perceived tech risk, whether cloud computing or whether using APIs, and that becomes a real on the ground interoperable issues. A lot of fintechs face, And this is an undiscussable because it takes a lot of time to recognize that's an issue.
Great. Thank you so much, all of you. And my apologies, I'm 2 minutes over to the organisers. But let me just conclude by huge thank you to all the panelists. We really enjoyed the conversation and your insights as well. It's going to be impossible for me to summarise all of that, but just some of the key points on the topic of fintech for an inclusive and sustainable ASEAN. I think Dr. Sari mentioned this importance of an opportunity to engage, particularly women and the informal sector. And again, I think equally more women in the fintech sector working on this agenda as well. I know Dr. Suri is the only woman on this panel. Maybe that will be different next year. I think Somnendu mentioned all the challenges and around distribution, instrumentation and manufacturing. So we're doing well, but there's still plenty more to do. I think Adrian mentioned this really important point around collaboration. And the importance of collaboration between fintech and different tech providers and combining different solutions. And I think Kelvin ended it very well by saying that the only way we can move this all forward is with political will. So I think that ends with kind of the key message to ASEAN member states and ASEAN leaders is that if we are to harness the potential of fintech for an inclusive and sustainable future, it will need their backing. So I will end there. Thank you all again to the panelists. Thank you to the audience. And Jenny, let me hand back to you now. My apologies, I'm 3 minutes over. Over to you.
So again, Jonathan, thank you so much. We were very impressed with his time management skills. Ladies and gentlemen, we're about to transition now to our very next important discussion on financial literacy. But ahead of that, we do have a very short 2-minute video by our platinum sponsor, one of our platinum partners, Standard Chartered Bank. We'll see you in a few minutes' time.
ASEAN is made up of 10 diverse markets, uniquely positioned at the heart of global trade routes. Home to a rapidly rising and affluent middle class, with one of the fastest growing digital landscapes, manufacturing hubs and abundant natural resources. ASEAN's strong fundamentals are driving its growth and resilience. With our knowledge and insights on local markets, Standard Chartered can help you accelerate your growth and navigate the complexities of each market. As you expand across ASEAN, we can support you with end-to-end solutions, streamlining processes across multiple jurisdictions, making it more efficient for you. We are leading on the ASEAN regional connectivity to integrate trade and payments in the region. To support the growing cashless ecosystem, we've digitized our cash management. From virtual accounts to a wide range of APIs, we've optimized digitization for your transaction and reporting needs. We are investing in fintech solutions and building new business models, creating efficiencies and better experiences for your customers. When it comes to working across ASEAN's supply chains to finance your imports, exports or inventory, and raising capital for your business, our award-winning capital market solutions are customized to your needs. As you expand outside your home market, our dynamic hedging offering helps your treasury team manage volatility, ensure price consistency, and deliver competitive margins. We're committed to promoting economic and social development in our markets. Our value and philosophy are embedded across our banking products and practices. With $75 billion committed towards sustainable development goals, we can help your business make a positive impact. ASEAN's future is bright. As your trusted banking partner, we are committed to supporting your growth ambitions, co-creating innovative and winning solutions with you. We are Standard Chartered. We are here for good.